Hello friends, welcome to your own channel, Noiseless Investment. Here we decode a company based on the fundamental analysis and get to know if the company is worth our investment or not. Please note, I am not a SEBI registered advisor and these are my personal views based on the fundamental of the stock. This video is for the educational purposes only. Please do your due diligence before investing. Please like this video, subscribe to my channel and click on the bell icon to get the useful information on a regular basis. The main purpose of this video is to mute the noise the operator create and as a result the gullible retail investors fall prey to. The purpose is to beat the operator by our own acquired knowledge. So today we are going to discuss about Apollo Hospital and get to know if Apollo Hospital is worth our investment or not. So this is the website of Apollo Hospital. You can go through this entirely. And now let's look into the fundamental of this company, because this company was the top gainer today, and as you can see in money control it was the top gainer today. Now let's go into Screener website and look into how exactly the company's fundamentals are. So the current market price of this company is 5,219 and the market cap is 75,055 crores. And if we look into the ROCE, it is 14.6% and the ROCE for the average ROCE for 10 years is 11.6. So it oscillates in the range of 11 to 15% range of ROCE. And if we look into the ROE, that is this one, then it is 13.9 and the average ROE for 10 years is 8.86. So it is oscillating in the range of 8 to around 14%. The face value for this is 5% and the dividend yield is 0.29. And if we look into the current ratio, it is 1.3, which means that the company is utilizing its cash and other reserves quite well. And but however the ROE and ROC is not that impressive. If we look into the EPS growth, so it is coming out to be rupees 57, which means that every share of Apollo Hospital is creating 57 rupees for you. If we look into the sales growth for this year, it is 13.3% and the profit growth has been minus 3.18%. So though the company is making the sales, but the company, the hospital is not making any profit. Now if we look into the sales growth for 3 years, it is 13.9 and the profit growth for 3 years is 13.9. So this specifies the CAGR of the company. So the CAGR is around 13 to 15% for the sales growth, and for profit growth it ranges between 67 and this year it was negative. And I've already specified about the EPS, the earning per share the stock is actually making for its shareholder, one stock of this company. And if we look into the Altman Z score, it is 10.6, so it is not going to get bankrupt. If we look into the Piotrowski score, it is 6, so it is lacking, so it is not 9, it is lacking in by 3. So ideally it should have a Piotrowski score of 9, but this is not having that. Now if we look into the operating profit margin, it is 12.1. So the company is actually, out of 100 rupees, the company is able to make 12.1 rupees and they are able to carry that in their pocket. So operating profit margin for the last 5 years is 12.8, so it is consistent on that aspect. Now if we look into the PEG ratio, it is 1.36, so the company has already so there are little chances for this company for growth. Now if we look into the return on invested capital, it is 10.9. So return on whatever investment you have done in this company, So it is generating 10.9% on that investment. Now, if we look into the fair values for this stock, then it is coming out to be Apollo Hospitals. Fair value is 4,536. So there is a probable downside of minus 12.9 that can happen. And if we look into the pros and cons of this company, so it is trading at a high earning multiples. So the PE is quite high and revenue growth has been slowing down recently. And if we look into this other pros, it is stock generally trades with low price volatility, so the volatility is quite low. And if we look into the beta of this stock, and if I'll go and search for Apollo Hospital, then the beta, oh, there is no mention of beta here. Okay, no, so it is 0.68%. so what does that mean is, if the stock market is moving by 1, so this will be moving by 0.68, and if the stock market will be falling by 1, then this will fall by 0.68. so that is why this volatility is quite low for this stock. So you can go through this. Let's go to the chart for let's first go into what exactly is the score out of 10 for this stock. So the stock score is coming out to be 4 out of 10. And if we look into the fundamentals is 4, earning is 2, and the relative valuation is 2, risk is 10, and price momentum is 5. Now let's go. However, this seems to be bullish. Now if we look into the chart pattern for this stock, Apollo Hospital, so it has broken this resistance, so it is forming a cup and handle patterns basically, and it is moving beyond this range of 5,226, and the RSI suggests that the stock is in overbought state, which means that there can happen a fall very soon. So be cautious on this, and because the operators, they may be driving this thing a lot. Okay, so the gullible investors like you and me, they will fall prey to this. So always do a fundamental analysis and check whether this stock is worth your buying or not, because the money is ours, right? The money, and so we should preserve our money. And probably nobody will tell you this thing, because everybody says that okay, this is moving, go and buy this stock, but we are going to do a fundamental analysis, and we know that okay, whether this stock is worthy of our investment or no. Okay, yeah, so that's it from my side, guys. Thank you for listening. Have a great day.